The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Month low against the euro and near a 10-month trough against the Aussie as markets price in a potential Fed rate cut this week and beyond. President Trump has proposed that US companies report earnings every 6 months instead of quarterly, signalling a possible major change for corporate reporting. And Google's parent company Alphabet has reached $3 trillion valuation for the first time. Let's get into the data now and the technicals with David Scutt, of course, joining us now. And Scutty, we are looking at some of the key drivers and market signals out there, particularly when it comes to Aussie dollar correlation.
G'day, Julian. Great to be back. Yes, a lot of people have been watching the Aussie dollar and trying to go and figure out exactly what's behind the strength that we've seen recently. And it really comes down to which pair you're looking at, but there's two key factors, and there are clues sprinkled in looking at the correlation analysis on your screen right now. So from left to right, we've got Aussie US, Aussie Euro, and Aussie Pound. And in the top section there, in that red box, it's basically China-linked play. So you've got dollar UN in yellow, you've got CSI 300 futures in red, we've got iron ore futures in Singapore in green, and we've got the Bloomberg Commodity Index futures contract in grey. And if you just look at the scores across all of those three pairs, every single one is very, very strong and significant. So it's just underlining when it comes to across the gambit how important China's market recovery and buoyancy has been in the Aussie dollar's revival. But it's a little bit of a different story when it comes to Aussie US.
And when you look as well in terms of what's happening with the Fed funds rates, why are tailwinds for the Aussie from lower US rates maybe getting to somewhat of an exhaustion point here?
Exactly. So you were just talking with your previous guest about what was going on when it comes to how much is being priced in. So this is the Fed funds futures curve out to September next year. And there's basically 131 basis points priced in. Now, the Aussie's got a very strong correlation with interest rate differentials between US and Australia for 2 years. So it matters for the Aussie dollar pair as well. And right now, if you go and start to go and push above 130, 135 basis points of cuts, it implies that the Fed is going to have to take the funds rate into stimulatory territory, which by consequence indicates that there's something wrong with the US economy. Now, if you think about other periods where there's been troubles in the US economy, the world's largest, it's not something that typically favors upside in the Aussie. So we've got to be careful what we wish for here. It's provided some big tailwinds at this point, but any more, and it might start to go and get heebie-jeebies about what's going on in the global economy.
We do not like the heebie-jeebies, Scuddy. What about what's happening in Chinese markets and why they're still kind of looking fairly buoyant in your view?
Yes, and this is the really key factor underpinning what's going on in the Aussie dollar. Now, there's lots of different facets out there. We talked about the currency, we talked about commodities, but to me, the most important linchpin of what's been going on is the equity market rally. It really kicked off with that earlier this year. And when you look at things like CSI 300 futures, the signal there that we're getting is that there's a lot of upside, but we're at a very, very important moment now on the charts. So 4525 has been a graveyard for prior bullish moves. And you can see that I've indicated with those red arrows down where it's just stalled at this level. And lo and behold, we're back there again, testing that particular level. And when you look at things like RSI 14, we've got negative divergence, which is a warning sign. It's not a complete sell everything, but it's just saying that something right now is losing this upside momentum. And so what happens in the very near term could be very influential, not only on the Aussie dollar, but broader China sentiment. So above 4525, we're looking at things like 4660, 4900 and 5140 on the downside, 4300, 4180 and 4028.
All right, so there's some of the key levels and the key levels as well, I guess, in terms of what we're watching with the Aussie greenback.
Exactly right. So I wanted to go and zoom out with this one because there's a lot of moves that's happened over the past week, which are pretty significant. So first and foremost, we've broken the pandemic downtrend and we've managed to do that pretty convincingly. And we've also broken resistance at 66.25. And we've managed to consolidate that point. But now we're sitting and we're testing the 200-week moving average, which I've just indicated with those arrows. You can see prior moves to this level have ended in rejection and reversal. So like what's going on in China markets right now is very, very influential on the Aussie dollar. So we have to pay very close attention, particularly to that what's going on the 200-week moving average. So 68 and 69.43 are the two levels on the top side to watch in the near term. If we clear the latter, I would feel confident saying that we've started a new uptrend cycle in the Aussie dollar. At this point in time, the trend break that we've seen is just, to me at this point, more sideways than anything else.
Looking like a pyramid in Egypt there. All right, let's talk about the ultra long bond treasury futures, Scuddy, and what that's telling us, particularly as we await the Fed's expected cut.
Exactly. If you go and look around the world at the moment, there's been so much anxiety expressed about the fiscal trajectory in the United States and other nations for that matter as well, and also concerns about inflation. But if you look at what's going on in ultra long bond futures, so this is UB traded on CBOT, what we've seen is a pretty significant technical move. So we've seen a break higher beneath the downtrend that runs from when the Fed went full bore dove back last year, and then the market saw that was a policy mistake and then sold off longer dated bonds. So for all the anxiety at the moment, we've actually broken that level, and now we're consolidating the break. And when you just look at what's going on when it comes to the momentum picture, the price break, it suggests that in the near term, we could go and see the prices higher and yields lower. Now, what does that mean? To me, it means that maybe the markets are saying, well, the Fed is not going to go and cut rates very, very aggressively beyond what the economy needs. Or it may also imply that something pretty bad is about to happen in the US economy. One way or another, though, it's really interesting, this break. And when you look about things like gold and other long duration assets, you wonder why they've been performing very, very strongly. This chart is the answer, in my opinion.
All right, Scuddy, always appreciate it. Have a great trading day. Thanks so much, David Scutt there from StoneX. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.